Hello, I'm Thomas Taplin and you're watching Dukascopy TV. Over to Germany now, and as we get ever closer to the country's elections in September, the political elite inside the Bundestag, or Parliament of Germany as it's more commonly known, are expected to come out with the usual big comments we often hear just as the race for government draws to a close. Already, big decision makers such as Wolfgang Schäuble, the Minister for Finance, has honed in on Greece, saying the Mediterranean country must stick to its pledges to reduce debt and rein in its spending. But what about Germany itself? Well, today we saw the latest German inflation data, and joining me on the line to take a closer look is senior economist at Berenberg Bank in London, Christian Schulz. Thanks for joining me today, Christian. First off, we saw the latest CPI figures for Germany today, a seasonally adjusted rise to 0.5% from 0.1% in the previous month. Was it what you expected?
These CPI figures were pretty much in line with what we had expected, maybe a tad higher, 1.9%, still below the ECB's 2% target, so nothing to worry about. These inflation figures are driven by one-off factors, mainly by food prices, so really nothing to worry about, slightly ahead of consensus, slightly ahead of our expectations, but clearly still within the 2% target of the ECB.
Now, there's been a lot of talk recently focusing on inflation and deflation, and we've seen a 1.83% increase on inflation year on year in Germany. Do you think it will continue to rise?
No, we think that German inflation is going to head slightly lower from here on onwards, and that's due to base effects in energy prices. The price for oil over the last year was relatively stable, and also this year, so we're not expecting energy prices to rise as much as they have over the past few months. That should put some downward pressure on prices, and also food prices are likely to normalize in Germany as the effects of the cold winter and of the floods in spring are likely to fade as well. So we're not expecting German inflation to stay at this level, but German inflation is now higher than the Eurozone average. That's new. Over the first 10 years of the Euro, German inflation was almost always below average in the Eurozone. So it's something to get used to, but nothing to worry about.
We saw a dip in the German market on Monday this week. It seems there are still many who are unsure of Germany's growth projections for the rest of the fiscal year. Why is this?
Well, Germany is experiencing various headwinds at the moment, especially for the export sector. So Germany has one of the most diversified export sectors in the world. It's exporting a lot to emerging markets, and these emerging markets have been slowing quite considerably lately. That limits the growth prospects in that traditional growth driver of the German economy. But at the same time, growth prospects are shifting in Germany. They're more on the domestic demand side. Consumption is looking good. We've had some positive consumer confidence data today, and also the low inflation rate combined with rising wages helps the purchasing power of households. So I think for the rest of this year, Germany will have to rely on domestic demand more than on the usual and traditional locomotive exports. And for that, it's not looking too bad. So what we're expecting is roughly trend growth at annualized rates of about 2%, 2.5% for the rest of the year, so that Germany will eke out modest growth of about 1%, maybe a little less for the full year of 2013.
Obviously, we've got German elections in the coming weeks. From now on, any negative data could harm Angela Merkel and her Christian Democratic Union Party. Is there any danger of this happening, do you think, given that Europe is by no means out of the woods yet with regards to its finances?
Well, Europe can still play a role in the election campaign if something were to go wrong. And political crises in the peripheral, in the crisis countries, can always erupt. We've seen smaller crises in Greece and in Portugal recently. We will have to see what happens in Italy, potentially after a verdict against Mr. Berlusconi. These things can have a bearing on the German mood of the German electorate vis-à-vis Merkel's rescue policy. But overall, things seem to be rather going in favor of the Chancellor at the moment, with confidence indicators improving strongly strongly. The worst of the crisis seems to be behind, and Germany has really gone through this crisis in a pretty strong fashion. So I think overall the European situation is more playing in Merkel's favor than against her.
Finally, and just very quickly if you could, ECB this week, rates will stay the same, do you think?
Well, the ECB will meet later this week. There will still be some discussions whether the ECB can do more to support the economy, potentially cut rates. But we think that these discussions, after the series of quite strong confidence data and also inflation not falling further, that these debates about rate cuts will be relatively short and that the ECB will keep its policy rate unchanged. But of course, it will warn of continued downside risks to the economy and to prices. So we'll keep a dovish language that should be reassuring for markets.
Okay, thank you for that. That's all for now. We add new interviews daily, of course, so click back and get your market fix here on Dukascopy TV. Until next time, goodbye.